Good afternoon, Africa. Welcome to another refreshing edition of African Economy, the program where we unpack the numbers, decode the markets, and explore the money moves shaping our continent. Whether you are an entrepreneur chasing growth, a student eager to learn, a professional keeping an eye on trends, or simply a curious mind trying to understand how Africa's economy ticks, you are right where you should be. So sit back, stay tuned, because today's edition is loaded with insight, analysis, and perspectives you definitely don't want to miss. I'm your host, Wangfonabasi Walter. Here's what we are tracking today. Fresh concerns hit Nigeria's capital market as a proposed 25% capital gains tax on share profits looms for 2026. Investors fear it could dampen market activity, while policymakers argue it is a step towards fairer taxation. The big question is, can Nigeria balance revenue drive with investor confidence? Ethiopia is positioning itself as Africa's next fertilizer hub as Dangote Industries begins a 2.5 billion industrial complex. The project could transform regional agriculture and reduce dependency on import, signaling a new chapter in East Africa's industrial growth. Ivory Coast is expanding its gold ambitions with new mining permits aimed at boosting export and foreign reserves. With global demand for gold rising, the West African nation is betting big on responsible mining to diversify its economy beyond cocoa. And Africa's share sector, is bouncing back, driven by a surge in local processing and value addition. From Nigeria to Ghana, small processors and cooperatives are turning what was once an export raw material into a multi-million-dollar beauty and food industry, prove that local value creation truly pays. Great to have you for this half-hour show. I am Wangfonabasi Walter. And to begin, let's take a closer look at the financial markets, starting with how the US dollar is performing against key African currencies. Let's take a look at the table which shows the US dollar against key African currencies. The US dollar against the Nigerian naira exchange rates fell to 1,471 naira 76 kobo, indicating a 0.16. That is a percentage of 0.01. The US dollar against the South African rand falls at 17 or rise at 17 rand, indicating a 0.04. That is a percentage of 0.23. The US dollar against Zambian kwacha is at 23 kwacha, which shows that the US dollar is falling against the Zambian kwacha at 0.1050, percentage of 0.44. The US dollars against the Egyptian pound is at 47 pound, indicating that the US dollars has fallen against Egyptian pound at 0.0175, and that is a percentage of 0.04. The US dollars against Algerian dinar is at 129 dinar, which shows that the US dollar is rising against the Algerian dinar at 0.151, and that is a percentage of 0.12. The US dollars against Angolan kwanza is at 918.6, which shows that there is no much gain in the US dollars against Algerian dinar. Aliko Dangote, Africa's richest man and president of the Dangote Group, has launched the construction of a $2.5 billion fertilizer plant in Dangote, Ethiopia, project expected to reshape food security and industrialization across the continent. The facility will produce 3 million metric tons of urea annually, one of the world's largest capacities. Prime Minister Abiy Ahmed hailed the project as a symbol of cooperation, peace, and Ethiopia's global presence. Dangote predicts Ethiopia could become Africa's leading agricultural nation within 5 years. On his part, Dangote, who has invested heavily across Africa, praised Ethiopia's economic reforms, including investment in transport, energy, and the Grand Ethiopian Renaissance Dam. He said the project marks a pivotal moment in the continent's push for industrialization. The government of Niger and the African Development Bank Group AFDB have signed a financing agreement worth $144.7 million to expand energy access and strengthen private sector competitiveness as the country works to harness its vast natural resources for sustainable economic growth. The program aims to improve electricity access, promote renewable energy and boost industrial contribution to GDP. It will form the first phase of the energy sector governance and competitiveness support program, a flagship initiative aimed at modernizing Nigeria's energy sector and boosting economic resilience. Speaking at the signing ceremony, Prime Minister Ali Mahamane Lamine Zain described the agreement as a major step in Niger's partnership with the bank, adding that the program would play a vital role in improving competitiveness and economic stability. West Texas Intermediate crude oil futures fell to $61.3 per barrel after a two-day advance as investors weighed a smaller than expected OPEC Plus output increase against persistent oversupply concerns and weak demand prospect. The producer group agreed on Sunday to raise production by 137,000 barrels per day, the same pace as in October, and well below earlier speculation of a more aggressive hike. The decision comes at a time of a rising Venezuelan export, the resumption of Kurdish crude flows through Turkey and the presence of unsold Middle Eastern barrels for November loading, all of which are adding to global supply. Limiting losses, however, were supply risks from Russia after reports revealed that Ukraine's drone attack on Russia's Kirishi oil refinery over the weekend halted its most productive distillation unit. Its recovery could take about a month, temporarily tightening regional supply. Jubilee Metals is selling its chrome and platinum asset in South Africa to One Chrome for $90 million. The company plans to allocate resources to its copper operations in Zambia, citing higher growth and improved margins. The move follows a wave of international companies exiting or downsizing in South Africa. Jubilee retains rights to the Jatai Platinum project, while eyeing Zambia's expanding role in global copper production. Meanwhile, Jubilee said the sale reflects a strategic pivot to focus on its copper operations in Zambia, where it sees greater long-term value. We now go to the world's top cocoa producer, Ivory Coast, who has approved 11 new mining exploration permits for gold, cobalt and copper, as the world's top cocoa producer pushes to diversify its economy and attract fresh investment into its growing mining sector. The permits were announced by government spokesperson Amadou Coulibaly following a cabinet meeting in Abidjan. The West African nation is positioning itself as a stable, investor-friendly mining destination at a time when regional neighbors Mali, Burkina Faso and Niger, now under military rule, are tightening control over mining assets. You're watching African Economy on Spectrum TV. Stay put for more business insight and analysis after the break. Thank you so much for staying with us. And now to the rest of the stories. We now go to Nigeria's capital markets as 25% capital gains tax on shares looms for 2026. Nigeria's capital market is in turmoil following fresh concerns over the impending 25% capital gains tax on share disposals set to take effect in January 2026. The anxiety stems from new clarifications made by Taiwo Oyedele, chairman of the Presidential Fiscal Policy and Tax Reforms Committee, during an engagement organized by the Nigerian Exchange Group. Oyedele explained that under the new rule, investors who sell shares and reinvest the proceeds in fixed income securities or other non-equity assets will be subject to a 25% CGT. He, however, noted that retail investors will largely be unaffected as a 150 million naira annual exemption threshold effectively shields 99.9% of individual players. Despite the exemption, capital markets operators warned that the new tax could disrupt investor sentiment, especially among foreign portfolio investors who have recently shown renewed interest in Nigerian equities. Before we dive into today's discussion, I would like to take a break, I beg your pardon, to celebrate our guest who is joining us on the program. Our guest today is Mr. Lekon Eyinyade, Tax Supervisor, Smile Communications Nigeria Limited, Lagos State. He's not just here to share insights, he's also marking his birthday today. From all of us at Spectrum TV, we say a happy birthday to you. Here's to more growth, success and milestone ahead. We truly appreciate you spending your special day with us. Welcome to the show, Mr. Lekon.
Thank you very much.
All right, let's get into today's discussion. Many African nations are striving to expand their tax net beyond the formal sector. From your own perspective, how can government strike a balance between broadening taxation and ensuring fairness for small businesses and low-income earners?
Well, first of all, I believe that tax is actually a very good thing for any economy to thrive. However, the issue is that people are always compliant when they see that there is result in the tax remittances. So if you are a taxpayer, for example, now,
Okay.
and if you're a taxpayer, for example, and you realize that okay, the government is actually doing something good with your taxes, you'll be forced to pay your tax. You'll be encouraged to pay your tax.
Okay.
However, the issue is that the problem we have in Nigeria is that there is no transparency. So what the government ought to do is to ensure that taxpayers, especially those in the middle and low income sector, they try to induce them to pay their taxes. By doing so, they'll be encouraged to to boost the economy with whatever taxes that they pay.
Okay. All right. So what practical reforms or innovations do you think can make Africa's tax systems more transparent, efficient, and people-centered?
Please come again.
I said, what practical reforms or innovations do you think can make Africa's tax systems more transparent, efficient, and people-centered?
All right. So when it comes to taxation, we have three parties. We have the taxpayer, we have the taxman, those pay tax, that's the tax authority, and we also have the government. So each of these three parties have all the responsibility to play in order to boost the economy. There's what they call economic growth and economic development.
Yes.
The target for every tax authority is to ensure that revenue increases every year. That is economic growth. However, economic development comes when there's an improvement in the general well-being of every Nigerian. I hope you understand what I'm saying.
Yes.
So by each party playing their part, the taxpayer adequately paying his taxes, the tax authority doing what is necessary to ensure that compliance is 100%, and the government ensuring that the revenue collected is used to improve the welfare of Nigerians. That includes good health care or free health care, education, good roads. It will boost businesses, it will boost a lot of things, it will boost human capital in general. So as a result, it could encourage even small companies to pay. It will encourage investors to come because they believe that yes, despite the fact that they are making profits, they are seeing the result of the profit they are making. And, at the end of the day, foreign investors come along. So that's more or less like the long-term effect of good tax compliance in an economy.
All right. Thank you so much for that insight. Now let's go to the share sector. That is the one sector that is quietly making a comeback on Nigeria's economic radar, is the share industry. Following Nigeria's ban on raw share export, the markets initially reacted with uncertainty. Prices plunged and traders feared a collapse in demand. But in a rather interesting turn, the sector seems to be bouncing back faster than many anticipated. Recent markets data reveals that prices, which dropped to about 570 naira per kilogram after the ban, have since rebounded, climbing close to 1,000 naira. Now, this rebound suggests that local processors are beginning to fill the gap once dominated by export traders, a sign that the government's push for value addition may finally be gaining traction. So is this rebound a sign of real industrial growth or just a short-term market adjustment? To still help us unpack this, we are still connecting with Mr. Lekon Inyade. Yes, so Mr. Lekon, looking at the numbers, we've seen a strong recovery from around 570 to almost 1,000 naira per kilogram within weeks. Analysts are calling it a positive market response to local processing capacity. Should we interpret this rebound as evidence that Nigeria's value addition policy is working, or is it too early to celebrate given the structure of the share supply chain?
Well, to respond to your question, I believe that when, for example, you're playing a football match and you change your formation, if you win the game, everybody will say, oh, you won. However, it's too early to say that you are challenging for the cup. So this applies to the changes that they made. The ban could actually improve over time, but I feel it's too early to call it a clear success. Over time, we need to look at how it will impact all the parties involved.
Okay.
Okay.
Okay, yeah. So now several studies, including recent agricultural policy reviews, have warned that bans alone do not automatically translate to growth unless we build adequate processing and logistics infrastructure. In this context, would you say Nigeria's share sector is genuinely positioned for long-term competitiveness, or are we still struggling to match the scale, quality and investment seen in other West African producers like Ghana or Burkina Faso? Please be brief on this, please. Time is almost up.
All right. So why I believe that Nigeria has a very strong raw material base and large domestic market, I also feel like there are a lot of things that stand in its way to improve. For example, we have a lot of weaknesses. We have supply chain weakness. We have processing skill weakness, technology, logistics, and storage. This over time has been our issues when it comes to agriculture, and even this share, but as it seems. So I believe that Nigeria still has a long way to go to compete alongside Ghana and Burkina Faso.
All right, that's quite insightful. Clearly, the share industry is proving that resilience is not just a buzzword, it is a reality when policy production and processing align. As we've heard, the rebound in the price is not just about market recovery, it is about opportunity for farmers, processors and investors looking to tap into one of Nigeria's most promising non-oil value chains. Thank you so much, Mr. Lekon Inyade, for shedding light on the dynamics shaping this evolving sector. We continue to follow developments in the share market and what they mean for Nigeria's broader agro-industrial goals.
Thank you very much. Happy to be here.
All right, and that's all we have for you in African Economy. Thank you so much for being a part of it. Stay. Thank you so much for being a part of today's African Economy. I am Wangfonabasi Walter.